Neither of us is antitrust attorneys, as far as I'm aware. I think I got a C- in antitrust law in law school. That said, from an investment perspective, you got to be aware of these headlines that kind of popped up out of nowhere. They're not dominating the headlines like they should because of, the election and pandemic. As an investor, does it make you rethink any of your investments in these companies?
Good morning, Brian. It's good to be with you. So we're always rethinking and evaluating the investments we own on behalf of clients. We've owned these large technology companies for many years and have done quite well in them. But the landscape is always changing, both from a technology and competitive landscape point of view, as well as from a regulatory one. So yes, we're going through the report. It was 449 pages of various recommendations from the House subcommittee on how to, their view. Their big takeaway is that there are some monopolistic forces at play here for each one of these four companies, and that they have some pretty full-throated recommendations on how to address that. It probably doesn't change the investment thesis for all four of them at this time. We don't think anything is imminent in terms of breakup or any major new regulations, but it is something that bears watching. And I will also say that it's not terribly surprising. And this was a 16-month investigation that reviewed over 1 million documents and interviewed over 250 experts. So this is something we knew was coming, and the FTC and DOJ is also working on independent investigations as well. So it's been out there for some time, and I think the market is well prepared for the report that was released.
Okay, quickly, do you own shares of Alphabet, Google?
We do.
Okay, so I ask you, so yesterday we did a private event, CNBC Pro event, and with an investor, T. Rowe Price, David Giroux, and he owns Alphabet, big position, and I asked him about it. He said, you know what? I'd actually prefer it to be broken up. He thinks the value of Google is more than the sum of its parts. Would you agree with that?
Brian, I watched that event, and you did a great job of discussing that. And yeah, I was a bit surprised by that response as well. I'm not sure I fully agree that it would be a uniformly positive event for Alphabet. I do understand the position that was taken, that if you were to say spin out YouTube away from core Google, that you might be able to unlock some value there in terms of allowing YouTube to trade at a higher valuation than it's getting when it's paired with the larger search business at Google. I'm not fully convinced that is something that would be. I think the gentleman said that the stock would be up on that day when they announced a breakup of the company. Again, our investigation in the company and analysis of the company doesn't necessarily point to a clear positive for that. But at the same time, Google's a big business, and YouTube is a big business for Google, and it's a growth business for them. And if it does allow YouTube to trade at a higher valuation, it may not be all bad. So we'll see what happens if we get there.
Listen, Apple as well. I think the criticism was they take a 30% cut on most transactions on the App Store. Again, I referred to it kind of as a walled garden earlier, and because once you're in one system, it's kind of hard to move unless you're willing to kind of give up everything you've already bought. I'm assuming you, like everybody else in the multiverse, owns Apple. Does Congress's concerns spook you at all as an investor?
I think as we look at the four companies that are in the crosshairs here, and we would rank them as Facebook probably at the most risk, Alphabet / Google second most. There'd probably be a hard line below Alphabet, a little bit of space, and then probably Amazon and Apple in the fourth spot. So, we're not terribly concerned about Apple succumbing to the heavy thumb of regulation or breakup. As you noted, some of the charges lobbed at Apple is that they charge too much for software developers in their app store, but it's really on par with what Android is doing and other providers of those services are doing. There's been some claims that they control the distribution of those software and apps a little too tightly within that walled garden. Again, that might be a little bit frustrating if you're an app developer on one hand, but on the other hand, it's also giving you access to some of the best economics in the app store. So I'm not sure that the case against Apple is so clear cut, and they probably have the least risk of the four based on the information that we saw in the House subcommittee report.
Shepard Smith here. Thanks for watching CNBC on YouTube.